Friday, October 13th, market analysis, Stan Ehrlich. We got some interesting stuff happening. We always start out with the stock market indexes, and we have lately been using the December E-mini futures contract for our first chart. Now, remember, I used to have the head and shoulder top formations outlined details. I may still have one or two left over, and that's gone because we have violated too many rules for that pattern to continue to be viable. And the downside objectives are now faded out. And we have the October lows on Friday last week. So we are now 1 week after. So the lowest low for October was on October 4th at this point. And we had 2 days later, almost at the same lows, a great bullish ER buy signal, green during the day. ER1 got long at approximately 4,300 and is in the position form, still long. The scalp version made money on the first day, the scalping day. ER3 got long the next day at almost the exact low of the day. 4,302.10, and had a great scalping day to say the least because it closed right near its highs, and it's a brand new position ER3 as well, also doing great. I'm bullish, obviously. The October lows, in my opinion, have happened very early in the month. Luckily, we got a huge, great buy signal till only 2 days later at almost the same lows. Remember, we did catch the top of the market with a high on July 27th being ER sell signal on the highest high day, and many other examples earlier. So up we go. But today we are currently down $1.60 or so in the SPY, which is my main gauge. And obviously we're down a little on the E-mini. We've made a slightly lower low, so it is making downside progress a little for the last couple of days. But my problem is that yesterday was a bearish engulfing. I mentioned the fact that that usually causes the market to slip, and it looks like we are, but not much, not very fast so far. I do not want this market to get down to our original ER3 entry price again, which would be 4,302.10. Now, if it does, we would more likely than not be out of all long positions. It would have made good money across the board, all of the trades, it looks like, and waiting for the next signal. The opinion I'm expressing is that that would be okay, but I don't expect it to get there. I expect it to bottom out something significantly higher, and it could be today's lows. I'd love to see this market pop back up again in the next, and it's 10:01 California time right now, 3 hours, and close higher, especially if it makes new highs for the day. It doesn't seem likely, but that would be great, and it could. I've seen, a lot more radical stuff than that. The likelihood is going to fiddle around and around where it is now and maybe sink a little bit more. Again, not very much, not very fast, and very soon, today, Monday, Tuesday, we're supposed to see a low, and it ain't supposed to be much lower, period. Next chart. Everything's about the same, of course, in terms of the expectations. Here's the way the 1 minute chart looks for this morning on the December futures contract E-mini. At the moment, slipping fairly quickly, but we'll see what develops. Next chart is the spider itself, and we did get the low in the spider market right there on, again, October 6th, just like the E-mini. The commentary is almost identical. I left this neckline in for the S&P 500 spider, and we did close above it and stay above it for quite a bit of time during the last 4 days. We, again, even closed above it, which is a no-no on a head and shoulder top formation after you close as low as we did. We got halfway down to the minimum downside objectives. And I recall it was 406 or 7 for the spider. So that's off now. That's gone. October lows are in. And we now are trying to figure out where the minor downside technical corrections in an uptrend are going to be and when, how high is up, how low is low, and the timing. Next, QQQs never broke out in the first place of the head and shoulder top formation. The old dashed red neckline never got closed below. We've already gone yesterday up to the only significant bear trend line we've got, stopped at the same price levels that it's done a few times before, a little resistance. And today's the first day down, and it's a new low for 3 days, and it's a fairly decent down day of 375 at the moment. But there's reasons to believe that it's going to bottom out not too much further lower. I'm going to say 361, see 363 and a half, which is close to today's low already. Looks very viable. Next chart, NASDAQ, same kind of thing. Never broke out. I've erased all lines. We got a sell signal close to the top of the market. This doesn't have a long life here, so there was not a lot of signals. And we have, that's about it. I'm expecting this to hold a little bit lower. I'm going to come up with 15 and 050, 2. Next chart, DIA hasn't even made it below yesterday's lows. Did not have a bearish engulfing yesterday, came very close, and did have a bullish engulfing at the bottom of the market. That's fantastic. We also had one back here, and we had one on also March 15th, but unfortunately October 13th, it came super close, but we did have that bullish engulfing, and I screamed bloody murder across the board that was the October lows 1 year ago. So here it is again, but this time we got the green bullish engulfing, October 7th, 6th. Love it. I got nothing wrong with the way this is filling around here. Again, this could have made a little bit of a low already this morning. The Russell 2000 has made a minor new low, and in fact, it's not very far away from the lowest low since the signal day, and that would be 169.50. So we have a fail-safe there. If you are still long, which you should not be, if you're using my ER signals strategies, automated, you don't get, well, you can make a decision, but you're not supposed to. It's automated. It does what it's supposed to do. You can watch it, use it, play with it, and then learn to rely on it and let it go. Next, spider. Yeah, this is the 1 minute on the SPY and the Russell. So I'm through with that. Let's go to the October low chart. This is my chart I've been showing you most of the time for the last few weeks, several weeks. I'm going to say more likely than not, I started showing you this about the middle of September. And I was trying to pinpoint the day and the price at which the October lows was going to occur. So I had October 16th, which is what, Tuesday, Monday. This coming Monday in line, and I had this price level at 407.5. Obviously, I'm off in price, and I'm not going to be coming down that far that quick in one day on Monday. Let's hope. So I was 6 days too early and a little too high in price, but at least I got my ER buy signal. Fantastic. And believed in it and set it. And we got a retracement that got filled as well. Fantastic. Now, I got no problem with this little dip. I just don't expect it to be very much more. We're going to be looking at all the futures now, and there's some really exciting stuff in the futures happening. All right, aiming from a different perspective. Nothing right or wrong here at the moment. This is all okay and maybe a good buying opportunity. I just don't have enough evidence to scream bloody murder. That's true, but it wouldn't surprise me. NASDAQ, same story, well above the neckline, which is never broken on a closing basis. Next is our bond market had a gigantic long-term short position on until just a couple of days ago when it finally got stopped out of that great new short. There's my sell signal on April 12th of 23, and we were short for months while this ER3 position trade trended lower until finally October 10th, we hit our trailing stop, which got very, very low because RSI got very, very low. And I talked about that into, during, and after, which I am, that technical situation. So no surprise. Great trade. What's going to happen next? Doji today, inside, nothing happening. We had a little correction yesterday, and it does bother me a little bit that it was a bearish engulfing, but it's not an official sell signal, and RSI is very neutral. And a lot of the times they really don't work that well if they're considered to be a signal all by themselves. Although Steve Nissen's book says there, and also a few others, Borkowski, that they are reliable historically to a degree. So looking at this, I'm saying we're going to rally back up to 117.18. And when we get there, let's talk about it some more. I think at the moment, it would be likely to top out. But that's if we're also overbought, and I'm not sure we've got that much elbow room here. We just might be able to get through this. Was this a long-term low? I keep thrashing this back and forth in my mind, and I don't have a signal and I don't have any evidence to it. It's just that it got super low, the lowest for about a year on the RSI scale, which makes me wonder, maybe long-term bottom or part of it. Next, same commentary for notes. Next, crude came down, closed the gap, a little bit of extra yesterday to the downside in a support area, and bingo, we open higher this morning and whopper of a rally. This is likely to be a new high close for the last 5 days, 6, yeah, 7, yep, 7 days, all of today. Zoom, and maybe even a new high for 7 days, but almost there. Well, we're bouncing just like I was hoping for, expecting, and mentioned, and I have no qualms with the situation. I think we're maybe going to make new highs. I hate to say that, guys. I'm paying $5.40 for a gallon of gas. Next chart, heating oil. Same whopping big rally. Already got up to my little resistance area that I talked about in the last couple of days. No comment about this at the moment on heating oil. We're not that overbought. I guess it can go some more. Next, natural gas. Pretty much the opposite. Major sell signal 2 days ago. Got short on the opening yesterday. Closed with a profit. Opened unchanged this morning. Dropped more. Made a new low since the signal day 2 days ago. Good. Close to the lows right now. Excellent. This is just plain old everyday working and pretty damn good. I don't know that we had 2 minutes worth of loss in this trade. At worst, it was only partial a half a day or less than that. Maybe no minutes at all. Oh, there had to be. After the opening, it had to pop up somewhere along the line. And that's where we got short, was 3.39. Okay, next chart. Looking for lower levels. Gold. Aha. Please note that the green bullish engulfing is at the bottom of the market in the gold. We have seen exactly this kind of trade last time that happened was over here. And this is a repeat again. I hate to say it. Oh my God. We also got the low of the market back there on February 28th, and something similar happened, although there was a big correction. And then it took off like a bat out of you know where. We got the top of the market, went straight down. Extra sell signal on the way down. And that was a bad one, small loss. This buy signal a couple of days ago is producing this trade in the gold continuation contract, the same one you just saw on a daily chart. This is the 1 minute chart. This is the date of and time of October 6th, 7:35 California time AM, when the outside up day occurred real time. That's the green bullish engulfing you saw on the daily chart, the bottom, the low day right there. That's our initial entry point for ER1 position trade. The yellow line is our continuous, constant, automatic STS smart trailing stop. And it is closing in on current prices because we're going up so fast, so quick. Oh, I'm expecting it to take a profit pretty soon, but this is a whopper. This market is up at the moment $57.9, almost high and last. This is a whopper of a trade. We are long at 1843, and this is 1941. Next chart. Silver, oversold in support, bouncing. Today's the real big up day into resistance area. Now, this could be bullish all the way back up to 25.30, where it got to with a bearish engulfing once it got there in an overbought condition. And that was August 30th and went all the way down to support again, just on 1 month and 5 weeks or so. That's all it took. And now we're already halfway back up and starting to shoot through resistance again. And we're not overbought. This could go further. This could look even better and better. One moment, please. There we go. Also, we came back down in the platinum market. This is the daily data on platinum into the buy zone, but it was a couple of days late and it's starting to work. So the signal is at the low of the trend so far in platinum. It's just not doing what gold and silver are doing, like screaming higher. Wow. I think platinum could do it. Copper, oversold, but below support for 2 or 2.5 days, and a new low ground for quite a while. This rally didn't go very far. Pretty much back up to the high of the support level. Now we're almost at a new low again and a new low close potentially. Second lowest close. This does not look good. This is going to make new lows. Soybeans, a whopper of a bullish engulfing yesterday. I'm not sure that you guys saw this when I was made the YouTube during the morning. Remember, there's usually half a day or a significant amount of the day futures markets left before closes in many cases. Today's low is just dynamite. It is just a little bit below my trigger prices. We are long at, in soybean, continuation contract 1275 and 5/8. The low today so far has been 1273.5. At no point was there more than 2 cents and a fraction worth of a loss. Currently 79.5. Let's see what happens next. So far, so good for the scalp version and the position version. Oh, this is ER3 as well. Yes, definitely. And we are probably still long the ER1 position. ER1 scalp almost positively made a heck of a great trade yesterday. Beans are being good. Next, and they're good for you. So next stop on the upside, very possibly all the way back up to about 1390. Not 10, 1390 in a week or two. Next chart, soybean oil. Different story here. This has a bearish engulfing head and shoulder top formation, which is a double top for the head of the formation. We have an ER sell signal on the second high. We have some bad signals on the way down, and that doesn't mean that this signal is going to be bad also, but that's a buy that didn't work. So this one's not going to work again. So far, so good. Definitely ER 1 overnight is making money. We almost bought this at the low of the day. Is just a hair above our bid, and for the next 2 days we could still get into this trade if it will come back a little bit lower than today's lows. We'll see what happens. I got to be bullish one way or the other. Bullish signal in the bottom of the market. I'm looking for at least a rally up to the neckline. Now, if we get to the neckline and start to work our way back down again, the signal will have worked great and caused the rally back to the neckline, and the pattern is still good. But if you get to the neckline and start to move above it, this buy signal begins to be much more profound after the fact. And we could easily rally a heck of a lot more. Next chart. Support held. Great big rally yesterday. Minor correction today in soybean meal. Head and shoulder top formation still intact. Don't want to see much more rally than today's high. It's a big one, so things get a little sloppy. There's not as much accuracy sometimes on situations. I'm still looking for a big downside bear market move in this sucker. If it'll break out to the downside, we could get down to 255. And we're just below 290 at the 390 at the moment. Whoa, big move. Next, corn. Long-term bearish, just like wheat's doing, and wheat is doing exactly what I expect corn to do. And next, cattle. Bullish engulfing on Wednesday, rally Thursday. Today, a little correction. That bullish engulfing looks pretty good. All the highs over a significant amount of time have been higher than each other and contain an ER sell signal at the high, or almost the high, the high, and the high. There's a song in there someplace. So we have a bullish engulfing, minor bullish engulfing that might do very well. This low is higher than that low, higher than that low, higher. This is still a long-term bull market, and there's no pun intended. Next, hogs. Okay, probably support's not going to hold. Long-term bearish. Gave it a try just a week or two ago, rallied to resistance, stopped it where it should have. Now it's coming down. I probably won't hold again. Look for new lows. OJ, I can't figure it out. This green tree disease is just terrible. I don't know where it's going to stop, but every time we get overbought, we might have a little downside correction quickly, but not this time. It's overbought now for well over about 2 weeks almost. Looking for sell signals, ain't going to get any yet. Now, my cocoa trade is so interesting. We have an outside up day today at this point, bullish engulfing. That implies that we got more of a rally. We're not anywhere near overbought, so that could easily happen. And I've been talking about this for the last 3 or 4 days now. This is maybe a premature shoulder on a head and shoulder top. The head is a double two-part formation. The first high was obviously my bearish engulfing high on August 7. And the two highs that we have back here is the other part of the top of the formation. But this high over here could very well be the first shoulder high. And then you draw your trend line off of the lowest low since. Now, I'm going to do something I normally wouldn't do. I don't see how I can help not to. Let's try that idea for the head of the formation. And instead of using this rally as a shoulder, how about that one? That's not bad. And if that's true, then the neckline goes like that. You know something, in either case, the downside objective wouldn't change too much. I actually like this better. How about that? Timing looks better, neater, smaller. I'm going to leave it like this. Sorry about that. No harm done. Next chart. Coffee. Whopping rally in a resistance area. I think it's going to come up all the way to 165 and maybe also again to 167. It's almost overbought already. At Jiminy Crick, super close to 75, 74.91 last on the RSI. So any upticks hardly to speak of will cause it to be 75 again. It's already been there. That's why we turned yellow for the price bars and the RSI bars. So downside correction soon, but it's still going up. And then again, up to higher prices Next, sugar, the sweet, higher lows, higher highs, long-term bull. Can't help it. Everything I say that's bearish ends up being maybe correct for a short period and then turns around. Looks like I should keep my mouth shut again. Next, cotton, the rag. Very boring, very sideways. Only thing I can say is most of the highs are about the same or a tiny bit higher than each other since last November, almost a year ago. And the lows are significantly faster, higher and higher. That would define sort of a flat top right triangle or maybe a slightly upward slanted wedge. Next chart. Don't know what to say. And we're back to the E-mini. I want to talk about sectors for just a second. You know, these are various indexes that I tend to follow and like. I'm only looking for either severe oversold. Now, this is in the last week or two, or a green. Every time I give you a different chart, and I'm going to go quickly through these. Here we go. Doesn't matter what index they are. I'm looking for buy signals. We got a buy signal. Question mark as to whether we made a new low or not, but still fantastic. Not really. Fantastic. That's fantastic again, 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 and again, and again. Not really. And again, look how many sectors I've gotten buy signals on. And I'm now 3/4 of the way through my little list of a total of 17 or so on the left. No signal at all. Oversold, oversold, no signal at all. Again, no signal. No green on the bottom. I don't consider that good enough. And that's it. You guys have a great weekend. Thank you.